Good morning, everybody. It's Tuesday, January 14th, 5:23 a.m. Central Time. Grain markets are just a little bit lower this morning following a sharp two-day rally in the row crop markets. March corn futures down 2.25 at 474.25. March soybeans down 1.5 at 1051.5. March Chicago wheat down 1.5 at 543.5. March Kansas City wheat down 2.5 at 558.5. March spring wheat down 3.25 at 590.25. Row crop markets rallied again yesterday. Let's start there.
So both the corn and soybean futures rallied yesterday. The nearby March 25 corn contract gained 6 cents per bushel and posted its best close since June 18th. From its August low to Monday's high, the contract rallied 72 cents or about 18%. The nearby March 25 soybean contract gained nearly 28 cents per bushel and posted its best close since October 8th. From its December low to its overnight high, the contract rallied $1.10 per bushel, or about 12%. The markets are clearly adjusting to a tighter old crop U.S. supply and demand situation following bullish data from the USDA on Friday.
Yeah, the market's very clearly adjusting and adjusting quickly. We've seen quite a bit of speculative buying. I believe we're going to get to the funds and their positions in a second. One of the other things that should be noted here is that there has been a big index fund rebalancing. Index funds are long only funds. And at the beginning of the year in particular, they do some rebalancing. That rebalancing takes place, generally speaking. The Goldman Sachs index is the big one from the 5th business day through the 9th business day. Yesterday was the last day of the fund rebalance. That's maybe one thing you should be aware of. But make no mistake here, the markets have acted incredibly well, whatever the reason. I think you have seen a lot of farmers selling into this thing. And I don't know if the farmer is wise or unwise to sell into this thing. But, if you're a farmer, you got corn that's unpriced. You missed the better prices that we saw back in May or June. And now you're back to where we were in June. Granted, you've probably paid some interest in storage to get yourself here, but it looks quite a bit better. I have some fears moving forward. I think the soybean market and the new crop soybean market in particular is the big problem for me. So new crop soybean futures, we're trading the Nov 25 contract around 1050 this morning, ballpark. That is a price that is well below production cost for the vast majority of U.S. soybean growers. For new crop beans, you're going to need the board probably close to $12 for a lot of guys to break even. Chris Barron tells me that among his customer base, the way that he budgets, the average production cost is somewhere around $11.70, and that's a cash price. So my fear, one of my fears, is that we lose a bunch of soybean acres and gain a bunch of corn acres that we don't really need, and that would be problematic. The other fear that I have, and we're going to get to this in a second, is tariffs. Trump takes office next Tuesday. What's going to happen? I don't know, but we do have some news about that here a couple stories from now.
The funds further increased their net long position in the corn market. CFTC released weekly commitment of traders data on Monday. During the week ending Tuesday, January 7th, large money managers were net buyers of 20,000 corn contracts. The net long of 244,000 contracts is the largest since November 2022. Funds were also net buyers of 11,000 contracts of soybeans and 2,000 contracts of SRW wheat on the week.
This has been an incredible sentiment shift among large money managers in the corn market. In July, just this past July, the funds were record net short 356,000 contracts. As of last Tuesday, the funds were net long 244,000 contracts, but that does not include the 2 days of heavy buying, Friday and Monday. In real time, private groups are estimating that the funds are net long somewhere near 325,000 contracts of corn, which is extreme from a historical standpoint and closing in on a record net long in the corn market here in January of 2025. Can you believe it? It's absolutely phenomenal. I can't help but wonder if there's something else going on other than just simple supply and demand and fundamentals. I've talked about a reinflation event. Is there fear of a reinflation event? Does the trade really just think that this corn carryout is going to go from 1.5 down to like 1.2 because demand's going to be so good? I don't really know, but the shift here has been absolutely phenomenal. In soybeans, we've seen something similar. So the funds were record net short 170,000 contracts of soybeans in July. As of last Tuesday, they were net short 14,000. But in real time, the private groups are estimating that the funds are net long 40,000 contracts of soybeans, despite all of the negative and bearish stuff I've told you about world soybean fundamentals. World soybean ending stocks are going to be record high. It's going to be extremely burdensome, massive crops out of South America, yet the funds are probably long the soybean market in real time. It's really an incredible shift in sentiment.
After meeting with President-elect Donald Trump over the weekend, the Premier of Alberta reported that Trump will include oil in his tariffs against Canada. According to Canadian Prime Minister Justin Trudeau, Canada will respond with its own tariffs if Trump goes ahead with his plan to impose a 25% tariff on Canadian products. Over half of U.S. crude imports originate from Canada, with the majority coming from Alberta. Canada sends nearly all of its exports, roughly 4 million barrels per day, to the U.S. The Canadian Minister of Foreign Affairs warned that Canada could restrict its energy exports to the U.S. in response to tariffs.
I thought Governor Trudeau was out. Is he on his way out?
He's on his way out.
Okay.
Yep. He's got a little bit more time, and then the next election, I believe, he's done.
Don't get all worked up about my governor joke, guys. Chill out, dudes. So this is interesting to me. So the Canadian government officials essentially believe that they're going to be tariffed on day one. If Trump's going to tariff Canada on day one, will he also tariff China on day one? And if so, at what point, if at any point, does China decide to tariff U.S. soybeans? And if you see the headline printed in the Wall Street Journal, China tariffs U.S. soybean imports to the tune of 25, 30%, whatever the number was last time. All they have to do is reinstitute the tariffs. It's very easy for them to do. Does the soybean market not sell off on that headline? You'd have to imagine there'd be some sort of sell off, right? I mean, the market right now appears to be completely ignoring the fact that Trump is coming back into office with tariffs and tariff threats in less than a week. So I think it's certainly something to be aware of, even though it doesn't seem to have any bearing on price action for the time being.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
Lengthy but super informative video with Pete Meyer yesterday, 48 minutes uncut. We talked about everything USDA. We did a whole bunch of mailbag questions that came in from subscribers, everything from just outlook to marketing to everything you guys wanted to know. And then Pete, who is really his area of expertise is broad, but he's been focused on biofuels. We talked about the news regarding 45Z and used cooking oils and that sort of thing in detail. This was a great video that we had out. Pete's on every 2 weeks, and we do these kind of longer form videos. Really great stuff. Pete's a sharp dude. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. You'll get our morning email every single business day at 5 a.m. Central Time. You'll get all of my cash grain marketing recommendations, all of our charts, graphics, videos, everything super easy to do on your phone. You can sign up on your phone in about 30 seconds. We do Cash App, Google Pay, credit card, any of those things. The videos are a piece of cake to open on your phone. There's no login instructions. It's just click to play. Give that deal a shot this morning, guys.
China imported a record amount of U.S. soybeans in 2024. The nation imported 105.03 million metric tons, an increase of 6.5% from 2023. Chinese buyers ramped up imports due to concerns that U.S.-China trade tensions might escalate after President-elect Donald Trump takes office. Excellent crush margins and declining soybean prices also boosted imports. China's response to Trump's proposed tariff policies is uncertain. However, Chinese traders have prepared by boosting stockpiles and diversifying their suppliers. Even if a trade war does not occur, oversupply and weak crush margins are expected to suppress imports of U.S. soybeans.
Yeah, we'll see. I don't know if the Trump inauguration has anything to do with this or not, but year in and year out, our export sales look something like this. This year, China accounts for 47% of all U.S. export commitments. USDA projects that exports will account for 42% of all demand for U.S. soybeans this year. So China in itself represents ballpark, 20% of our total demand for U.S. soybeans. And that's why a tariff type deal or a trade war type deal is important and noteworthy. Granted, China could tariff U.S. soybeans, and you could just see a game of musical chairs. Maybe other global buyers come to the U.S. where China does more business with Brazil. I have no idea how this is going to play out. There are so many uncertainties with regard to the Trump administration, everything from tariffs to biofuels, maybe an even bigger question mark. There's just a lot of things that we don't know right now.
Rainfall is disrupting soybean harvest in Mato Grosso. According to well-followed private group Ag Rural, harvest pace in the Brazilian state is the slowest in 7 years. Even with the harvest delay, the state's soybean potential is still excellent, and there have been no reports of quality issues. The delay in harvest could impact the optimal planting window for the second corn crop. Meanwhile, a lack of rainfall and hot temperatures are impacting the soybean crop in southern Brazil. Brazilian farmers have harvested only 0.3% of this season's soybean crop, down from 2.3% last year.
Planting, if you remember, started off slow in Brazil, and then they caught up very quickly when the rains returned. I don't see, here's a good map from our friends at Crop Profit regarding past precipitation. Over the last 30 days, Mato Grosso's seen 97% of its normal rainfall. So like basically totally normal. You go a little bit further south and yeah, it's been drier, and that's where the weather concern has been. So despite the reports that, hey, rain is delaying harvest, I'm not overly concerned about that. The forecast is wetter than normal. So yeah, could there be some minor delays? I suppose. I don't see it as being hugely problematic. The trade seems to be working with a number for the Brazilian soybean crop close to 170. Some people are as high as like a 174, 175. And I believe right now, as of right now, it'll fall somewhere in that neighborhood. If you look at the map here, it looks like the rains are going to return to far southern Brazil, which had been dry. Looking at this kind of more problematic area, which has been southern Brazil into Argentina, rains are expected to return by Friday, Saturday, and then more rain during the 10 to 16 day. But there's still some soybean areas of Argentina that are going to be drier. So I wouldn't be surprised if you ran into a situation where the Brazilian crop came up a little bit, the Argentina crop came down a little bit, and you're left at kind of a wash versus current USDA estimates.
U.S. corn shipments easily surpassed pre-report expectations last week. USDA reported that 57 million bushels of corn were inspected for export during the week ending January 9th. The print was up 64% compared to the previous week and up 51% versus the same week last year. Soybean shipments were reported at 50 million bushels. The print was up 4.2% from the prior week and up 5.5% compared to the same week last year. Wheat shipments were reported at 11 million bushels. The print was down 30% from the previous week, but up 19% versus the same week last year.
Absolutely fantastic. Corn shipments should remain strong for a while. Soybean shipments seasonally should start to back off from here, but they've been pretty good. Wheat, nothing to write home about.
We had a flash sale of soybeans yesterday. U.S. exporters sold 7 million bushels of beans to China for delivery during the current marketing year. Current marketing year soybean sales are the sixth best in the last 10 years.
We are not competitive versus Brazil landed in China February forward. So I don't know if this is just some cleanup business or what it is, but make no mistake, if you look at the cash markets, February, March, Brazil's like 80 cents to $1 below what the U.S. can offer out of the Gulf shipped to China. What did cattle do yesterday?
Cattle futures were lower. Live cattle were 42 cents to $1.57 lower. Feeders saw losses ranging from 50 cents to $1.95. Box beef was higher. Choice ended the day at $333.35. That was up 51 cents. Select ended the day at $317.57. That was up $3.43.
Outside markets, U.S. dollars off a little bit. Stocks are higher. Bonds up just a little bit. Crude oil's down 24 cents in the March WTI at 77.06. Have a great day, guys. We'll be back on Wednesday.